Right. Who else wish to record? Agnes Yu is recording. We are start like we are starting lecture 3.2. Right. Xiao Yu is recording. Right. We have finished on this. We stop here, right? Case one on misrepresentation. Right. So now we talk about case two. Right. Anthony Maguire is an issuer paid analyst. Right. Right. Issuer paid. Hired by publicly traded companies to electronically promote, right, their stocks. So he creates a website that promotes his research efforts, right, as a seemingly independent analyst, right? So seemingly independent on the surface. So Maguire posts a profile and a strong buy recommendation for each company on the website, indicating that the stock is expected to increase in value. All right. So he does not disclose the contractual relationships with the company he covers on his website. He's paid, right? Okay. So in the research report he issues or in the statements he makes about the companies on the internet chat room. So, right, the key issue is he portrayed himself as a seemingly independent analyst. So this is misrepresentation. That's it. Because he's issuer paid, right? Paid by the companies, paid by all these publicly traded companies. And he does not disclose the contractual relationship. Right? So he must disclose. So the right is misleading because he portrayed himself as a seemingly independent analyst, right? So now he would tend to be biased, definitely. Maguire would tend to be biased, but even if his recommendations are valid, right? Even though he may not be biased, right? His omission regarding the true relationship, right, between himself and the companies he covers constitute a misrepresentation because of his omission. He failed to disclose that he is an issuer paid researcher. All right. So as a side note, right, he has also violated 4A, sorry, 6A, right? Disclosure of conflicts by not disclosing the existence of an arrangement with the companies through which he received compensation in exchange for his services, right? Disclosure of conflict of interest, of conflicts, right? So this is also, he has also violated this standard, right? This is just a side note. All right. Right. Case three. Yao is responsible for the creation and distribution of the marketing material for his firm. And he creates and distributes a performance presentation of his firm's Asian equity composite that complies with GIPS. Right, GIPS is the Global Investment Performance Standards, right, and states that the composite has 350 billion yen in assets. So, however, the composite has only 35 billion yen. in assets, and the higher figure on the presentation is a result of a typo, right? You have a typo. I don't know whether it is really a typo. Nevertheless, the erroneous material is distributed to a number of clients before Yao catches the mistake. Right, so you can see, right, Yao is responsible for the creation and distribution of the marketing material. The material has been distributed before he catches the mistake. So he should owe up, right? He should owe up. So it's the correction of, well, here in this case, we give him the benefit of the doubt, unintentional. We don't really know whether it is intentional or unintentional because he's responsible for the creation. So to put in one more zero, right? So his competence is also in question, but this is beside the point. Here we just talk about misrepresentation, not about his competence, right? To have an extra zero is a serious problem. So now the thing is, let's give him the benefit of the doubt. Let's say it's unintentional, but then again, once the error is discovered, right, he must take steps. He must take steps to seize the distribution, to stop the distribution of the incorrect material, and correct the error by informing those who have received the erroneous information by distributing an errata. An errata, right? An errata is a notice of the error. So as Yao did not knowingly make the misrepresentation, right? Here we sort of give him the benefit of the doubt. Well, it's questionable anyway. He did not violate initially, right? So, but then again, as long as he correct the error, if you correct the error by informing those who have received the erroneous information, he must do it, right? So initially we don't, right? So here we assume that he has corrected himself by informing those who have received the erroneous information. Then, we give him the benefit of the doubt. He did not violate. Right, so here, now, standard 1C is about the code and standards, right? So again, we must also talk about regulations, right? Regulations. So the GIPS, right, is also a regulation. Global Investment Performance Standards is a separate regulation from these standards. So now, since the firm, claims compliance with GIPS standards, right? It must also comply with GIPS guidance statement. So they have this guidance statement on error correction, right, in relation to the error, right? So if he does all this, he is also complying with 1C and the GIPS. So if he take the trouble of informing those who have received the erroneous information. Okay, is that clear? Right, Sai, CFA, president of his own investment firm. Right, promotional material created by the firm's marketing department claims he has an MBA in finance. Right, in addition, he has his MBA in finance, in addition to the CFA designation. Right, so, well, this case is not written by me, but just as a side note, right? So the thing is, if Sai has got a CFA, right, there's no point having an MBA in finance, really, because actually this CFA designation is a lot tougher to get to obtain than this MBA. This CFA is a lot tougher. So anyway, in this case, it's not written by me, right? So this is part of the material, but this doesn't seem quite right to me. He has an MBA in addition. I don't know, maybe he tried to make himself look more qualified. So that's why he's putting MBA. But to me, if you have a CFA, it's really good enough because to me, it's actually higher than an MBA in finance, a CFA. But nevertheless, all right, this is beside the point, right? Just as a side note to what I'm thinking. So although he attended the business school for a short period of time, he did not receive, right? He did not receive the MBA, right? He attended, but did not qualify with the MBA. So over the years, the firm has distributed this erroneous material to numerous prospective clients and consultants have already distributed. And he is supposed to be a CFA, and he is supposed to be the president of his own firm. Well, this is about ministerial responsibilities. The concept of ministerial responsibilities. Right? He's the president, and he should know. He can't say he doesn't know. But all right, right. So this is non-correction of known errors. So actually, it's a known error, but there's non-correction. All right. So over the years, it has been distributed. All right. So most people will think that site is guilty. Right. So I mean, this statement, we sort of give him the benefit of the doubt. So even though site may not have been directly responsible for the misrepresentation of his credentials, well, I mean, I don't believe that actually, right? But anyway, this is not prepared by me. So even though he's not, he may use this material. He used this material numerous times, right? So don't tell me that he's that stupid, right? He used this material numerous times over an extended period and should have known, right, of this misrepresentation. So basically, it's non-correction of known errors. So he's actually guilty of non-correction of known errors, and he cannot plead ignorance, right? He cannot. He should have known, right? Thus, right, he has violated 1C. All right, so it's very clear cut, this case. Right, next case. Cindy, research specialist, mining industry, right? She had read an extensive research report on Jefferson mining by Barton, another analyst, right? So Barton's report provided extensive statistics on the mineral reserves, production capacity, and other factors affecting Jefferson's operation. He also noted that initial drilling results on the new Oro vein, which has not been made public, might show the existence of mineral zones that could increase the life of Jefferson's main mines. But Barton cited no specific data as to the initial drilling results. So Cindy called an officer of Jefferson who gave her the initial drilling results over the phone. The data indicated that the expected life of the mines could be triple. Wow. So Cindy added these statistics to Barton's report and circulated it as her own report within the firm. Right. So basically, right. So Cindy, right, is using Barton's research report. Right. So basically, Cindy is plagiarizing Barton. Right. Okay. Cindy added these statistics to Barton's report. Right. She used these statistics. She got it from a phone call. Right. From a phone call. These drilling results. Right. From a phone call. Okay. Right. So basically, what Cindy is doing is She used Barton's report and added some statistics, right? So like all these drilling results, okay, are the statistics added to Barton's report, right? And circulated it as her own report within the firm, her own report, right? This is plagiarism, okay? Right? It's plagiarism. So basically, Cindy plagiarized the report by reproducing large parts of it in her own report without acknowledgement, right? Without acknowledgement, right? And she also added, through the phone call, right, unverified, possibly biased data obtained by telephone from officer at Jefferson, right? So basically, she's combining these two, okay? Right, so definitely she has violated this particular standard. 1C is misrepresentation. Right, case 6. Kenny manages the investments of several high net worth individuals who are approaching retirement, right? Kenny advises these individuals to move a portion of their investments from equity securities to certificates of deposits and money market accounts with the message that the principal will be guaranteed but not the interest. Right, so basically, right, so from yeah, in a way, I mean, he's doing something sensible, right? High net worth, and they're approaching retirement. So you move from equity, right, to fixed deposits and money market. These are lower risk. Yeah, in a way, he's doing something sensible, right? This part here. But the issue here, right, uh, is not about the sensibility, right? The issue here is about this message that the principle, right? The principal portion, right, will be guaranteed, but not the interest. Okay, the principal will be guaranteed. Right. So as I said, you cannot use the word guarantee here because I mean, I'll talk about the issue here like in Malaysia, right? So if you talk about certificates of deposit, they are similar like the FDs in our country, right? The fixed deposit FDs, right? Now the FDs, you cannot say, the principal is guaranteed, right? Your fixed deposit, actually, the principal is not guaranteed because you heard of PIDM, right? PIDM. This is the government body that guarantees the FDs, but there's a certain limit, so regardless of how much you put in, there's still a certain limit. So I think the maximum limit is only 150,000. So say if you put a fixed deposit of say 500,000, I mean, that doesn't mean that your principal is guaranteed because for each account, the maximum amount is 150,000. So even with this guarantee, so PIDM guarantee, you're not guaranteed the full amount in case the bank goes bankrupt, right? So to use the word guarantee in any circumstances, right, is misrepresentation, right? So there's potential information misrepresentation. Sorry. Right. So here I talk about PIDM, right? So there is still a risk that the institution offering the certificate of deposits or whatever could go bankrupt, right? So in the US, they have this FDIC. In Malaysia, we have this PIDM, similar. All right, they're insured to a certain amount. Okay, only to a certain amount. So using the term guarantee in this context is not totally appropriate. Not totally appropriate. Right? as long as the government amount is within the government insured limit. Not totally appropriate. All right, so he hasn't done it yet, so there's potential information misrepresentation in this instance. And so Kenny should clearly explain all these facts here, right? All this to all the relevant facts to his clients. Okay. Any questions so far? Right, Steve is the senior analyst of Ballard & Co. Apex Corporation has asked Ballard to assist in the acquisition of Campbell Company and to prepare a report recommending that stockholders of Campbell agree to the acquisition. Okay, so another investment firm, Davies & Co., has already prepared a report for Apex, analyzing both Apex and Campbell and recommending an exchange ratio. So Apex has given the Davies report to Ballard officers who have passed it on to Steve, who then reviewed the Davies report along with other available material on Apex and the Campbell companies. So from his analysis, he concludes that the common stocks of Campbell and Apex represent good value at their current prices. He believes, however, that the Davies report does not consider all the factors, right? Does not consider all the factors a Campbell stockholder would need to know to make a decision. All right. So Steve Yu reports his conclusions to the partner in next charge, who tells him to, so this is the critical part, right? To use the Davies report, change a few words, sign your name, and get it out. So in other words, this is still plagiarism, right? So nevertheless, for some students who don't understand all this, who don't understand all this, it doesn't really matter. But I hope you understand. If you don't understand, doesn't matter. Well, not to say it doesn't matter, right? But the most important thing is you must understand this part here, right? So this is a critical part. So this part, is about plagiarism, right? So basically, he can't just do things like that, right? Just use the report, change a few words, sign the name, and get it out, right? There's nothing about referral to the Davies report, right? He doesn't identify the Davies report as a source. There's nothing about using it as a source, so he can't do it just like that. All right, it's clear-cut plagiarism. Right. So if this guy does as requested, right, he will violate. If he does as he will violate, definitely, right? So basically, this is what he should be doing, right? He could refer to those portions of the Davies report that he agrees with, right? If he identifies Davies as a source, right? If. So that means he must acknowledge. Okay. Then, right? So as a source, right? So then he should add his own analysis and conclusions before signing and distributing, right? You can do that. But the most important thing is, he must identify Davies as a source, and he failed to do it. So if he does as requested, he will violate 1C. All right. So now we have done all these mini cases, right? So basically, this is like some sort of like training and how to look at the cases and as to how to answer the question, right? So these are just examples. I hope you pay attention. as to how it is written, but these are all just points. You should add your own words, all right? Right, so we'll just continue with 1D, right? Misconduct. Right, misconduct. Right, so here we are talking about professional conduct, not personal, not so much as personal conduct. But then if your personal conduct affects your professional conduct, then it is misconduct. Right? So not all personal conduct, not all personal misconduct will affect your professional conduct. So if your personal misconduct affects your professional conduct, then you're violating 1D. Is that clear? Right. So here it just says you must not engage in any professional conduct involving dishonesty, right, fraud, deceit, or commit any acts that reflects adversely. Right. So all these acts can be personal, right? But if this personal act reflects adversely on your professional reputation, integrity, or competence, then this is misconduct. Are you with me? Right. So basically, the intention of 1D is to discourage any sort of unethical professional behavior or conduct. Okay. Right. So basically, any dishonest act or conduct. So the conduct may or may not be legal or illegal. So we are not talking about legality here, right? We are not talking about legality. So usually when we talk about misconduct, right, we talk about lying, cheating, stealing, this sort of thing. Anything that is dishonest, usually, right? Or any other improper behavior, right, which reflects adversely on one's professional activities or which damages the trustworthiness, right? Damages the trustworthiness or competence would violate this standard. Say, I mean, like a professional, right? He goes drinking, right, during business hours. He drink alcohol during business hours. So not say during lunch hours. So in the afternoon after lunch, right? He's not very competent, is he? And his judgment is not very trustworthy, is it? So that means, this sort of behavior, if you abuse alcohol during lunch hour, or if you drink during working hours, that's even worse, right? Okay, so you cannot fulfill your professional responsibilities. All right. Okay. Right. So, like for instance, right, you may have a situation where a person may be a bankrupt, right? So a bankrupt, right, a person who is a bankrupt may not be untrustworthy because the person may be bankrupt because he's a guarantor, right? He guaranteed somebody's loan. So he is not the borrower. So that means not all bankrupts are, you know, I mean, uh, has misconduct, or has misconducted himself. All right. So I hope my point is clear. That means I'm trying to say is that personal bankruptcy, may not reflect on the integrity or trustworthiness of the person declaring bankruptcy or being declared a bankrupt, right? But if that person, is bankrupt because he himself was involved in some fraudulent or deceitful business conduct himself, then it is a violation of this standard. But if he was a bankrupt because he was a guarantor, right? Because he was a guarantor, that means he did not violate this standard. I hope that's clear. All right. Right. So now this part is also very important, right? This will give you some guidelines as to how you should suggest about some remedies, as to how not to violate this standard. Okay. So these are just guidelines, right? Develop code of ethics, right? Blah blah blah. Uh, that's any sort of behavior will not be tolerated, right? Okay. So disseminate to all employers of the list of violations and associated sanctions, punishments, you know, and check references of potential employees, to make sure that they are basically of good character, So these are just some of the recommended procedures for compliance. All right. So these are also very important because in some of the questions, right, in your exam, you will be asked to suggest ways as to how the protagonist in the case, uh, could avoid violation of the standard. So these are just suggestions. You can use this, right? So pay attention to this. Right. So some case studies, right? Misconduct. So Simon, right, investment officer at a bank in a small affluent town. So he goes to lunch at a country club, right? So his clients have observed him having numerous drinks, right? So when we say have drinks, right, it means alcohol. Let's go for a drink. That means, it's not drinking soft drink. Usually, when in the Western context, when we say having drinks, that means it's having alcohol drinks like beer and wine or liquor. So back at work after lunch, he is clearly intoxicated, right? Clearly is intoxicated while making investment decisions, right? So that means his colleagues know about that, right? So his colleagues make a point of handling any business with Simon in the morning because they distrust his judgment after lunch, right? So that means, you see, right? So he's drinking. This drinking part is not a professional misconduct, right? So this is a personal misconduct, right? So, but this personal misconduct makes him intoxicated, right? So now this making investment decision is his professional conduct. So that means his intoxication affects his professional conduct, right? So as long as your personal misconduct affects your professional conduct, that means you are violating 1C or 1D, misconduct. Are you with me? Okay, so you better observe this concept properly because some students, they got this wrong, right, in the past. Right, so this is about professionalism, right, and competence. Okay, because his intoxication is affecting his investment decisions. Okay, right, so that, okay, here he's intoxicated, right? So you can use the term because he's drinking excessively. Subsequently, he's intoxicated at work. So this constitutes a violation, right? Because his personal misconduct affects his professional conduct. All right. because his judgment and hence his competence and professionalism is adversely affected after lunch. So this kind of behavior, right, reflects poorly. So his reputation goes down, right? So looks bad on him, his employer, and the investment industry. Okay, he is basically like a black sheep. Okay, right. So I will have to end it now. It's past 1. I will stop here, and we will continue on Monday. All right. So bye for now, and have a nice day. Uh, Thank you, everyone. Bye bye.